Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, in part 3 of a 3-part series, Paul speaks with Ken Esch, partner of PwC's Private Company Services, about the encouraging results of their third quarter Trendsetter survey of private middle market companies.
So how do the credit markets look for private companies these days in terms of credit availability? And I mean, given the optimism, given the sort of the strengthening of the balance sheets over the past 7 years or so, how is that looking right now in terms of people's ability to access credit?
Yeah, I think we're in an environment where rates have been steady. That credit has been available to businesses, particularly those that have a strong track record coming out of the recession, and that banks are willing to lend more to companies with even less restrictions and covenants. So I think that anecdotally, the businesses with a strong track record, have multiple options, out there, to borrow money or take on additional investments, at rather low rates, and they're accessing it, to some degree to fuel acquisitions. But a lot of the investment that we're seeing, is really driven more off of internal growth and redeploying the earnings back into the business, as opposed to really adding additional leverage to the equation in a material way.
I should probably, because I know the survey was taken before the midterms, but I'm interested to get your take on obviously for a long time the instability, uncertainty with respect to the regulatory environment, the tax environment, and those things has been a pretty big concern. It's still a big concern, but it's being reduced clearly. Any thoughts on how the midterms might affect that, given the fact that the Republicans pretty much had a wave? I think everyone agrees that they had a wave election. Now that they've taken over both houses of Congress, do you think that uncertainty is going to have an impact on anything? And I understand this is purely speculative because I know the survey was taken before, but I'm just interested in your perspective on that.
Yeah. Well, I think that the one thing that we do know from the survey is that concerns over legislative and regulatory pressures have stabilized, and if anything, come down, a bit,
mm-hmm.
Particularly from some of the, standoffs over debt ceiling and things like that. We could have potential, fights, going forward, even in the near term here, about appropriations. But none of the participants, seems particularly worried, about that at this point. They're more concerned about just general demand for products and services, and concern over having access to qualified workers to fund their growth strategy. So
right.
Regulatory and legislative pressures really aren't too much on the radar screen right now. I think with the different parties controlling Congress versus the presidency, we'll continue to have some level of gridlock. And hopefully they can come together over big items, like increasing the debt ceiling, which is going to be on the table, here I think within the next 6 months or so.
Yep. But just remember, Ken, my admonition: gridlock is good. If nothing gets done, that's probably the best thing for things.
And I think that businesses are looking for stability, right? And some level of gridlock, forces parties to either come together on things that are broadly approved by the population, or the things just don't pass. So, having some level of gridlock isn't a bad thing for business.
Summarize the report this quarter. Fire away.
Yeah. Well, I'm happy to see that the continued strong views about U.S. economic performance are translating to additional investment in property, plant, and equipment. With over 40% of the participants telling us that they're going to increase capital expenditures. The other thing I think is at least positive, from an employment perspective, is that the companies are continuing to see lack of qualified workers as a potential headwind, to growing their business, and are out there, looking, to hire, individuals that can come in and immediately, contribute, to their growth strategy. And I think that is positive, for the overall, economy, as we see more and more people, going back to work. So, overall, Paul, I'm happy to see that the economy is, on rather strong footing, particularly here in the U.S., and that we expect that the companies are going to continue to reinvest in their business, and hopefully that will project to continued economic prosperity, here in the U.S.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.